recording.
This is Market Week Live, January 3rd, 2025. Information and support for traders and investors. This is the legal things we need to go through every single time we do this. So this just says that what we are presenting is for entertainment and educational purposes only, and is not investment or trading advice. Everything we do on our website, oral, written, or any way that we bring that to you is for you to use for discussions with your investment advisors and to do the best job you can following your own trading plan as you make your investment or trading decisions. You can refer to our legal at askSlim.com. Here's a host today. We have our whole analytical team, this amazing team. And if you want to learn more about us, go to askSlim.com, about askSlim, and meet the team. And you'll learn about the four of us. And there's some great interviews in there. So make sure you do watch that. I think you'll find it interesting. This is the contact information for membership issues or website issues. Write to team at askSlim.com. And anything about our content, information on our education or analysis, first-time specials, upgrades, anything around that, you can write to Matt at askSlim.com. Coming up today, we're going to have our Q&A, so you can put the questions in there right now. Levels 1 to 4 members are here, and you get a special Zoom link, so they can participate. If you're watching on YouTube and you want to participate in the Q&A, please do become a premium member, level 1 to 4, especially take advantage of the last few days we have now of our special Give the Gift of askSlim membership, so we have a lot to show you about that. We're going to bring you today, actually this time we don't have trade planning and chart analysis today. We're going to bring that back in the next week or so. Matt's going to bring you a review of our services, and at the end of the show, if you're really interested in seeing the great depth that we have, make sure you stick around, because Matt is going to do a special presentation at that time, and you will then be able to see our specials that we gave for Give the Gift of askSlim. And I'm going to give you my stock market analysis at the end of the show, show you my projections, show you our great indicator price roadmap that I think you're going to find very interesting. So we'll give you a lot in this show, and make sure you put your questions in right now. If you're new and you've never seen our information before, go to the top of the website to the free stuff and become a free member, or you get SIR Lite. You'll get information every single day on the stock indexes, specifically the S&P 500. On YouTube, subscribe to the channel, click the notification bell, like this video, give it a thumbs up, and follow us on X at askSlim. Questions, again, write to Matt at askSlim.com. All right, we're going to get right into our Q&A right over here. And I see that people are putting questions in there. I take the futures, and the rest of the team takes the indexes and takes the stocks and ETFs. So they'll be looking at that. And I see there are questions for me. I see Molly has Palladium PA. I don't cover that one at all, so I can't give that to you. If you're a level 4 plus member, you can send a special request to the team, and they'll be able to help you with Palladium. And I see lots of questions in there for the team. So for me, it's only light crude and natural gas. And then, of course, I'll be getting to the indexes at the end of the show. So let's move now to the charts. And let's leave the SPX. I'll come back to that, and /CL. Really interesting, because when we looked at the light crude market over these last months, we were looking at a scenario that was negative. We thought that the market would actually come down in towards the end of this year. And those are the yellow corrective zones when you get the last minor cycle. That's the yellow areas, the last minor cycle and the dominant cycle coming down together. You can see when that happened here, you got this decline from roughly 84.5 to 62. So it was a sizable decline. Here in the final stages, it depends really where you measure. measure it, but it was again 82.5 down to 63, so it was that kind of a decline. And here in this final cycle right over here, well, it came down here from 84.5 down over here to about 65. So it had a similar decline in there. I had looked at the possibility for a throwaway like we had right in over here or right at the bottom here, but we didn't really get that. And now the market is starting to move to the upside. It's pretty much declared that this bottom is in place by the shape of this advance. And the projections, as I gave them at the end of the year in the year-end show, and our members have seen that right now, was getting up into this resistance zone over here. This is 77.5. This is 84. So it's pretty reasonable. Monthly chart's a little different on the targets, but it's pretty reasonable to get some moves well into the 80s when you see this pattern. And we're getting this a sizable uptick there on the weekly chart. Now, when I look at the daily chart, again, look at the cyclical rhythms in here as they form, and they look pretty nice to me. So right now we're putting in what's called a right-hand translation, where right over here you see this minor cycle is rallied all the way to the end of the minor cycle over here. What does that tell me? Well, it only leaves a very brief time for a pullback, and that would be into this support area. So if it got down to, let's say, between 72.20 and 71 right in here, that probably would be a short-term buy area. Right now, it's not backing off at all, and this is very swamped. Swamp meaning that this declining phase here is not happening, and the reason for that is because the momentum is strong, as you can see here on the slim ribbon. Here's where the slim ribbon turned green right over here, and the slim ribbon PO shows it right there. And it's been very strong, not able to pull back. If it could pull back down over here and then give you the green arrow, that would be a good sign, like you saw here and here and here. Right now, it's so strong it can't even pull back at all. So when I look at the weekly momentum, you can see the weekly momentum on the reversal scout turning up right over there. When I look at the daily momentum, you see that right over here. All of that is very strong, and it says to me, minor pullbacks give a high probability of a buying opportunity. Again, remember, our analysis is probabilistic. We put together the cyclical patterns along with momentum conditions, and using swing high, swing low analysis off of the cyclical patterns create support, resistance, and projections, and that's what we have right in here. So this minor cycle likely to give you some pullback for a buying opportunity, and then moving up again, very likely to get above that 78.6% right over there. And this cycle peak on that minor cycle is up over here at 77. So this is a positive scenario that we look at in light crude. We'll take a look here at natural gas /NG. And this is a beautiful pattern again. Those of you that watched the year-end special, excuse me, I showed that I think natural gas has got a lot of potential upside later in this year. Look at these cyclical rhythms that you see right in here now. So here's the dominant cycle in the harmonic family right there. Here's the intermediate. So you can see there's like a half cycle and then a real minor quarter cycle. So this quarter cycle didn't show because it was so strong. When it came down over here, they both pushed to the downside. Momentum had turned weaker here. Then you turned up here, had that minor low, and now you have all three coming down right over here. And that's why you're getting this rejection off of that 420 area there in natural gas. Now, there is all three of these pushing down right over here is a corrective force. And even with all this cold weather that's coming through the country, it was kind of a buy the rumor, sell the news that's going on right now. And you can see in here, the weekly and daily cycle troughs are synced into February. Now, what does that mean? It means that I've done analysis on the daily, and I look for synchronicity where it's very common that the daily and the weekly, in fact, almost always will sync at its troughs at the same time. So if I go to the daily here, look at the beautiful cyclicality in here, you could see this decline right here coming right on time along with the weekly, though momentum is still strong. You can see the slim ribbon right here and the slim ribbon PO green. Very shortly, you're going to probably get an upward turn and a green arrow right over here, and you're going to then see another upside move. Now, I said that there's a synced trough in February. If I look at this next cycle, that's right at the end of February, beginning of March. So that says to me that you get another rally up over here and then probably a failure, and that syncs up with the weekly troughs over here in February or the very beginning of March, and then likely be moving up again. So that shows you that if you were one that wanted to be long natural gas, well, you get a buying opportunity that's coming up pretty soon, but it's probably going to be one that doesn't get to a new high or just barely test the high and then comes down again. If you were somebody that wanted to short natural gas, well, I don't see that opportunity here because it's already pulled back, it's already in support, and probably going to get into this minor rising right here and dominant rising right over here that lives in this white space on the weekly chart right here. So it's not time to short it. It's not time to buy it unless you're an aggressive trader that is willing to just kind of take this ride over here for the next maybe week or so. And again, we don't really have the upturn yet because it's just selling off. So if you're buying it while it's falling hard, you'd only be buying it very, very small. You wouldn't want to be that aggressive right now. But the long side looks right to me at this moment. The short side does not. That's putting the sum of the evidence together as I look at that at natural gas. So that's my job in here, was to show you those couple of things. In the future side, I'm going to turn this over to the team, and I'll be back a little later showing you everything on the stock market. So I'm going to give this to the team, and you can take over.
All right, Slim, thank you so much. Let's go ahead and share our screen. We're going to look at a few underlyings here. First one is Adobe. Give it 1 sec to load. Okay, so you should see both a weekly and daily chart for ADBE. Now, this is not in great shape here. You can see now a series of lower lows, and now we have lower highs here. And this could have been a higher low base, but instead it failed right at that 78.6 and sold off and has now cracked that low right there at 475.05. So what does that all mean? Well, it says right now this is very likely in a overall bear mode where the high has formed early, and we look for a series of lower highs and lower lows into that next trough. That next trough is due out in the April to May time period in ADBE. There is a zone here from 414 to right around 375-ish. If we see a little bit lower here, which is likely, we would be looking for a pop off of that and then another move back down into the April to May time period. If we shift over to the short term. Now, in the short term, what are we looking at? We're looking at a now far lower low versus the old low. We'll be watching for a move back up and then a failure, and then for this to move back to the downside into the end of February. If we go ahead and hop over now to Apple, we will pull up Apple. You can see what's happening here in Apple. We have seen a rally up into this zone here from right on 253 to 269, a pullback. We are holding this zone here, but we are going to be looking for this to be more range bound on the intermediate term. On the downside, 245 to right around 235 are the levels down. In the short term, this is really key, is that we've lost this low here at 245.69. Our next trough is only due out in the early part of sorry, just hearing a child screaming in the background. If you're hearing that, apologies. There is a low that is due, let's just call it right around the 4 to 5 week time period here. We'll be watching for a series of lower highs and lower lows going out into that time period. So not a good look here whatsoever. If we shift over to the next one, we will be looking at GDX. And what we see here in GDX is that there was a low that was due right here and we are watching for this to have a turn back to the upside. After that, we are just barely holding on to that 61.8 fib at right around the $33 area. In the short term, there is a low that is due here. We are looking for this to turn back up. We are watching for this to hold here and then to get this to curl its way back to the upside into that 36.30 to 37 area. And I am going to hand this off to you.
Okay, let me take the screen. Let me know when you can see Tesla.
Got it.
Oh, all right, great. So Tesla, we had a large move up off of this intermediate cycle low right here, all the way up to the 200% fib extension. Then we started to get these candlesticks showing some selling pressure here. Now we do have a minor cycle low that is due right around the middle, beginning to middle of February. And we've got this retracement. So far, this support zone has held. Momentum is still positive, just beginning to flatten out a little bit. So if we were only looking at the weekly chart, this doesn't look that bad. Let's go over and see the daily chart. Here we have a cycle that is 30 bars in length. We are approaching this daily cycle timing window. And notice that we're getting down towards this 78.6% fib, which is a warning level. Getting down that low would suggest that we're not going to be able to take out the high in the next cycle. So we will have to wait and see. We do have earnings coming up. Of course, anything can happen on earnings. This timing window is from January 10th to January 21st. So that time period is when we would expect Tesla to form its short-term trough. Now, this cycle right here has a due date, a trough due right around the end of February. So we may get this minor cycle trough either with the current cycle that we're in on earnings or perhaps a bit late. So we'll have to see how the rest of this cycle and that cycle shape up. Right now, we do have the reversal scout having turned over. It is negative. And just this week, we've got a deterioration in momentum from positive to just neutral right now. The other one that I'm going to look at is NVIDIA. So here we've got a 26 bar cycle. We do have a timing window that's coming up in from 310 to 418. So that March-April timeframe. We did tag the bottom of this target zone. That's the 78.6% fib. So we just got up there. So I have projected that NVIDIA will try to retest that area. And then as we get into the declining phase of this weekly cycle, we can get some more downward pressure. Right now, I am projecting down to the bottom of the support zone. That's right around 120. Momentum is negative, but this is getting almost like a mid-cycle bounce. So if we continue a little bit higher, then we could see the reversal scout begin to turn back up. So this is kind of neutral at the present time on the weekly. Over on the daily, we have a 24 bar cycle with a timing window coming up 121 to 130. So right there at the end of the month, we are approaching the 78.6% fib, which is a repair level. So if we get through there, then the prior cycle peak at 152.89 is the next target up, and that also corresponds to that target zone from the weekly chart. So there's a possibility that we could get higher. We do have this rising support zone, so we will have to see how this shapes up. Right now, I'm just kind of neutral on NVIDIA. The reversal scout on the daily chart is positive, and just today we returned to a positive slim ribbon. So I'd like to see how this cycle shapes up before I can make any solid prediction on that. Those were the only two that I have, so I'll turn it back over to you, Slim.
Okay, great. Thank you very much. All right, I have a couple more questions and I'm going to answer quickly on here. Walter says that he sees an inverse relationship between Bitcoin and the VIX daily. And do I have any comment on that? He uses Bitcoin, especially, uh, he tracks Bitcoin using the VIX, and he wants to see if there's a potential for a downward move, but rather upward move. In other words, VIX goes up, Bitcoin goes down. So yeah, that was a little bit confusing. I want to give clarity to that. What you're saying is that there's an inverse correlation. When VIX goes up, Bitcoin goes down. That's what you see on the short term using the daily charts. There's a very clear reason for that, and that is because normally, of course, it doesn't have to hold up the correlation all the time, but normally when VIX goes up, VIX is going up because there is a problem in the stock market. The stock market is getting sold. People need to pay up for insurance. They buy puts. There's a flight to liquidity going on as they sell stocks. If they're going to need to raise liquidity by selling stocks, it really bleeds over into everything. And something as speculative as Bitcoin, you would expect that if they have to raise money, they're going to sell Bitcoin. So that's why you're seeing that inverse relationship between VIX and Bitcoin. And I wouldn't it wouldn't surprise me to see that inverse relationship be pretty consistent moving forward. DJV says, hi, Slimmy and squad. Happy New Year. Same to you, Danny. He wants me to explain there's a minor cycle and a shifted cycle on the S&P 500. I will get to that when I do the stock market, because there are two of them on the chart, and he really wanted to know what we're looking at. So we'll take a look at that as we move forward. So that wraps up our Q&A for today, and we will be back doing that in a couple weeks with you. So thanks for everybody for the questions. All right, I'm going to turn this over to Matt. He's got this is where he reviews askSlim services. He's going to talk about the gift of askSlim, and this is the last chance now as we've gotten through the holidays here. So Matt, take it.
All right, Slim. Great work, team. Okay, you should see the homepage of askSlim. For those of you that are new to askSlim, as you just experienced with that analysis, we offer technical analysis at an expert level based off of Slim's 50 years of trading and technical analysis experience that we have been trained in the askSlim methodology, as Slim and the team has shown you. So with that, we have many premium membership services. I'm going to go show you what that looks like. We have 4 levels of premium membership services: the level 1, level 2, level 3, level 4. And we also have a day trader service. With each membership level, what happens is that you get increased level of coverage in terms of the number of stocks, the number of indexes, the number of ETFs that we cover. And also, as you increase in membership level, you will experience our innovative trade planning tools that we have built. We also have additional premium videos that we share as you get into level 3. And then once you move into level 4, that's when you get direct access to the actual chart analysis and chart grids and indicators that the team prepares on a regular basis, and also that special bundle of grids that we have created that is part of the Give the Gift special that's going on. So with that, the holiday special, as Slim mentioned, is ending. It is ending on Sunday. So this is the last call for that. If you've had an interest in becoming an askSlim member, I'm just going to pull this up a little bit, or if you currently are and you have been considering upgrading, this is an excellent time to do that. In that we have, these are non-recurring membership options. You can give the gift to yourself, or you can give it to a friend, someone who's interested in technical analysis, obviously, or also learning the trade planning process, how you bring both of those together, because you have to be able to create your own decision-making process and then be able to apply that. And we do that here at askSlim on a regular basis. So we have level 2, level 3, level 4. All 3 of them are 3-month non-recurring memberships. They're 35% off for each one of those levels. Plus there's Amazon gift cards that will go along with that if you're new to askSlim, or if you're giving that to a friend. So there's a $20 gift card with the level 2, $50 with level 3, and $100 with level 4. Again, these are non-recurring. And if you are currently a member and want to upgrade, you're more than welcome to do that. Or if you're brand new, you can take advantage of it as well. So these will be ending on Sunday. Also, at the end of the show, once the regular show concludes today, I will be staying on and doing a membership tour of level 2, level 3, 4, and a Q&A for those of you who have questions. If you are live in the YouTube audience, you can email me directly with those questions that you have. So I encourage you, if you do have an interest and you want to learn more, to stay on after the regular show concludes. All right, Slim, back to you.
All right, great. Just a reminder to everybody, stick around at the end of the show. Matt will walk through a lot of this stuff in detail with you, and I think you'll find that it is just a great opportunity for you. So let me just get back to sharing my screen, and let's move on to the stock market analysis. You should be seeing my screen right now, everybody. Every week I show this important screen on the analysis that we offer. I think this is really important to read because it does give you a good sense of the way we approach our analysis and about you using what we provide. That I think it's very important that you understand the trade ownership, that the trades that you put on are not ours, they're yours. And if you take trade ownership really as one of the most important aspects of your approach to the markets, I think that your performance will be much, much better because you're not waiting for anybody to tell you what to do. You're not waiting for any information. You're just applying what we or what anybody shows you from any of the professionals around the internet, and then using that information to see how that fits with who you are as a trader and your analytical style. So really important. And there's a video in our library on trade ownership that I think is very important. So you could watch that. All right, so this is the stock market brief. Just going to talk a little bit about the stock market before I get into charts. Well, basically, tax selling ended. As you can see, the market rebounding today. There was a lot of tax selling at the end of December. I talked about that early in December, that I thought December wouldn't be a great month because it made sense that there would be this, high concentration of stocks that had big profits, that they would be under pressure as people took profits and then took losses against them on a lot of the other stocks that did not perform well this year. Remember that the vast majority of the gains were in 10 stocks, and the other 490 stocks in the S&Ps didn't do that well. So now we're past that tax selling period right now. Usually you get a little bit more in the beginning of the year, possibly as people decided they didn't want to take their profits last year. They would rather roll it into this year and then pay the tax on it this year. So we've had a lot of gyrations that we've seen in the market. There's no sign of rotation yet when I look at this. Now, we've talked a lot about the potential for the stock market moving up if it could get into a rotational period where you get the growth stocks and you get the small caps and mid caps leading the market up. There's not a lot there's not a high probability, in my opinion, that the market's going to get led up by the same stocks that it did last year. And if you watch our end of the year show, my upside projection is much lower than most of the analysts out there. And the reason is because I think that the market is not going to be able to get led higher by the ones that led it up for the last 2 years. Now, there's also worldwide economic woes that are really very apparent. This is especially in China. Now, something that most people don't look at, but I think is very important, and I'm going to show you a chart on that, is the bond market in China. Of course, China's been, for decades a growth leader. And in the last recent years, because they had so overexpanded, they were really having trouble stimulating their economy. Now, China 10-year bonds are at the lowest levels ever. And the yuan is under a lot of pressure. This is all very important, and I'll talk a little bit about more when I show you a chart in here. So the slowdown that the China is getting, and Europe certainly is in a slowdown. Japan, Germany, no growth at all going on over there, maybe slightly negative. That's not good for the U.S. economy. And the stimulative effect of Trump policies that people have celebrated, I think that's over. And I think that if anything, there's more disappointments coming in the stock market once President Trump gets in office. And volatility remains as we see a very wide intraday chop in the market going on. We've seen this now for a number of days, and we have the VIX elevated. Now, in the year-end show, I show the VIX is in the very early stages of the monthly pattern, which is pointing to potential for elevated VIX and potential for upside spikes, which is greater than the potential for declines in the VIX. So inversely, that means the potential is greater for big declines in the market than there is for big advances. I think it's going to be hard fought to get upside moves. And if you saw our analysis that we did just a few minutes ago in some of the stocks, you can see that some of the leaders are looking like they are breaking down and having some trouble. So a few charts that I want to show you in here that I think are very important graphs, and then I'll get into looking at the indexes. First one I want to look at is the Chinese 10-year government bonds. So here you can see what's happened just here in the last year, as they've gone from roughly 250 all the way down to 160. This is because of extreme weakness in China, and they are essentially exporting deflation to the U.S. as the yuan drops. So the U.S. dollar is the strongest we've seen it in ages. The yuan is extremely weak. We have the prices. That means that the U.S. pays for Chinese goods is much cheaper. Very, very strong dollar, a weak yuan, and that is not good for our companies here. It is stimulative to the companies in China. But what does that mean? It means that the tariffs that have been threatened by President Trump are an absolute certainty. And he's not going to wait very long to impose those, because he doesn't want to see the U.S. have to the U.S. companies be under pressure because Chinese goods are so cheap to us. And he thinks that they cheat anyway in a lot of ways, and that might be a good argument. But when you look at this with interest rates down at historic lows in the 10 years, it shows you how weak China is. And you can't have, the second or third largest a country in the whole world under this, what really looks like a coming recession at best, without that bleeding into the rest of the world, and especially here into the U.S. I think once U.S. investors get it, U.S. rates will drop, and that will be at a time when stocks drop, sending the dollar down again. So dollar very strong, but if the stocks fall, as I believe that they will a couple times this year, and that the market doesn't get as much to the upside as a lot of analysts believe it will, that these declining phases in the stock market will send rates down and the dollar will fall again. So we're maybe very near where the peak of the dollar will be and the peak of interest rates will be. And right now the market is pricing in less than 2 rate cuts here in the U.S. For this whole year. I think they're going to end up cutting maybe a little bit more than that, because I think there's going to be more weakness than the market is pricing in right now. So I thought this was a very, very important chart to show you. This is very important to our markets and world economies. The next one I want to show you is that while we have this situation of the China being extremely weak and the rest of the world having a lot of weakness in it, the U.S. S&P 500 price to book ratio is at the same level it was at, basically, or a little bit higher than it was back in 2000, before the markets, of course, went into two bear markets following that. I believe that we were going to get into a secular bear market. We're going to have a significant reset. I do believe that is the case. It doesn't have to be today. And sometime this year, we can make new highs, as I expect. But still, it's looking at this, it's really going to keep the stock market from being able to make very significant moves to the upside. Another version of other things I've showed you of a market that's very overvalued. And just one more. This is that market concentration. This is the top weight of the 10 stocks. And you can see right now it's at 38 point something percent, 38 percent of the SPX is just in those 10 stocks. If you look, you have to go way over here to the Great Depression to see where they were buying up some specific big companies back over there. That was in the case then, it was the steel companies and pushing up the indexes. Of course, there was no S&P 500, so that's a reflection of the Dow back then. But this is 38% of the S&P 500. You can see these other times, the Nifty 50. This is where I started trading, back over here, where the Nifty 50 was pushing up, the Polaroids and Xeroxes, and you know what happened to a lot of them. And then, of course, the dot-com bubble and the COVID pandemic there, where it had just before that gotten up to about 32%, but now we're at 38%. So source here for Zero Hedge, just a great look at a massive extreme. So, you know, what does this really mean? This means that it's going to be very hard for indexes to move up. This concentration is very significant. And at the same time, had a big rally led by AI. And we're at a time frame where we're starting to see commoditization of AI products, AI chips. And when that happens, and then prices stop going up or begin to fall in the chip category, then there's a lot of pressure in the NVIDIAs and the Broadcoms, and those stocks that are doing really well and have done really well won't be able to lead the market up. So that's why it's important to get a rotation to be able to lead the market up and get the broader market expanding and money moving into that. But even then, it's going to be hard to get the indexes to move up. So let's take a look at where we are right now in the indexes as I switch over to the analysis of the charts. So we're looking at the weekly, the daily momentum conditions, which you can see have turned red there, and the 2-hour right over here. Let's take a look here as we see the momentum conditions and the cyclical patterns. So this green dash right there that you're looking at, that is the Russell. It's lined up differently than the stock market, than the S&P 500 and the NASDAQ. So the Russell trough is right over here. As you can see, the S&P trough looks like it's right over here. And you can follow the minor cycles right there. So there's a minor cycle, there's a minor cycle right there. And you have a minor cycle coming down here into February, March. We looked at some of the stocks earlier today, and that was suggestive of the fact that there was some weakness in a lot of these higher cap stocks that's likely to come into that period. We see Apple, you know, breaking down and coming down into that period also. Also look over here. So this is where the momentum turned up over here last May. It got into that minor correction. The momentum turned up right again over here. Through this corrective period, momentum stayed very strong. This was that very strong market that wouldn't correct. But now look at the reversal scout. It has turned over and it is negative. That comes at the same time in here that we're starting to get breakdowns on the daily chart. So DJV asked me the question about this cycle right over here. I tend to leave up cycles when I'm still looking at shifts. So I have this ghosted out, but it may still have an important influence on the market. You can see you got only a minor decline right over here. You got the bigger decline right over here. And this is where it began to shift. And then as you got into the end of the year, this really shows the failure as it got up in that rally. and then turned over, and the momentum, as you could see right over here, has turned red on the slim ribbon PO. The slim ribbon turned negative right over here, so that's negative. That shows you that. This is your resistance areas. It just gotten into there right now, 59.20 up to about 59.70. I would expect bounces to be able to stop in that area. If the market could get up over this level right over here at 60.50, then I would start to believe something was better. But right now, this is a very negative look to it. You can see the cloud in here as it turned down, and now the lower track gets put in there because of this breakdown. So many times during the last year, the upper tracks were added because the market kept moving up significantly, but now the lower track is added. And the downside projection right now is 57.80 down to about 56.90. That's this lower track right over there. So that's what we're looking for. We would expect rallies like we're getting today to fail, rallies like we got yesterday and here on Thursday, which gave you that quick failure. So they could hold up today. They could hold up into early next week, but then we would expect that they would be turning down right there. You could see here on the momentum right there. If you look here on the bottom, this is the option bias indicator. Now, this gave you positive readings all through this period here. Turned neutral during this little correction right there. Turned positive. You can see the slim ribbon PO giving you those positive readings. And then over here it neutralized, and this turned yellow. It's a little hard to see that right there, but those are yellow right there. Neutral, and right over here, negative. So this is telling you that with the slim ribbon turning negative, with the option bias indicator turning negative, that it's time to have your position, your option positions with a short side bias. We have not had that for a long period of time. We had a little period back over here last summer where you got some pullback in here and it got negative right there, but then you can see turn positive again. While this is negative, it's an important thing to look at and says to you, your overall option position should be biased to the short side. That's why I developed this indicator for you to be able to have that, because so many people get run over in their option positions by momentum because they think it's safe to be short premium. And the market taught you over this last couple of years that it made sense to be short put premium. But when you get into this condition, short put premium has much higher risk. And that's the importance of looking at that indicator. Here's the 2-hour chart. Now on the bottom over here, this is an important one to look at because this is the market condition indicator. This is a multiple time frame indicator that's weighted more for the longer time frames. And when it gets down to the 25, it says it's testing essentially. And when it crosses under the minus 25, it says that the longer term upside power is gone. Well, right now we're in the middle of that. So it's, you see it has a 4 reading if you look on the right. If it gets under minus 25, it will be giving us a negative reading. In the meantime, intraday momentum is negative, and if you were a intraday swing trader using the 2-hour chart for your directional decisions, this would be showing you negative. So as you can see, the overall picture in here has turned much more negative than we've seen in quite a while. And it says to me that rallies like we're having today should be held in suspicion. Now we'll look at the NASDAQ. You can see in here that the NASDAQ has not rolled over yet right there on the momentum. So that says, okay, let's give it a little bit more respect. Let's wait to see what happens. But if you look over at the daily chart right over here, this rallied and then took out this low here. So that says to me, when I go back to the weekly chart, the probabilities are pretty good that the momentum is going to turn down, and this decline right over here is going to take you out into this February period on the minor cycle, which would then take you down to, since it already got to this level right there, at around 20,700. The next target would be down over here at 20,370. That's that next level, and that's a reasonable target for the downside over here. Right over here is 20,000, that 20,300 and change area. And again, the lower track put in there. We have this older cycle still in there. You know, like I said, when I was looking at the S&P 500, there's always the possibility that an older cycle ends up to be still in effect. If that were the case, then the market would come down, and here it would rally again and begin to take out these resistance levels. So we'll learn about that, DJV, as we move forward. As you asked that question about that, I think the highest probability is the shifted cycle right now, and we have that projected over here, especially when you look at a lot of the stocks that are projecting out into that late January, February timeframe for their downside move. So again, rallying up here, momentum has turned neutral on the daily chart, as you can see right here. Not turning negative yet, but it is very close to turning negative. And then you will then have a higher probability of following this downward track. The momentum in here again is neutral. And right over here, the option bias indicator has turned neutral. It has not turned negative yet. So it just might be telling us that, you know, if you were a pair trader, it might be that the NASDAQ is the long side of it. You have to watch the intraday trading to really tell that. But NASDAQ a little bit stronger than the S&P 500, but not much when you look at the intraday. Again, the test here on the market condition indicator, and it's trading at 6. It needs to get under minus 25 to give you that negative signal there on the NASDAQ. So that's a look at the NASDAQ, a little bit stronger than we see in the S&P 500. And the Russells, the next one we'll look at on the weekly. So you can see these cycle timing lines right over here. And here is the range of the next weekly cycle. Now, you can see that this clearly has a momentum downturn there because it had turned more negative. It's actually a little bit stronger right now, these than the S&P 500 or the NASDAQ. But that's only on the intraday. It's just a little bit stronger, but still a very negative look when you look at this. And again, this comes out to March. Before this low is, we have it projected down here to 2145. But I wouldn't be surprised to see a test of this low here at 2060. Let me just bring that in right over here so you could see that cycle bottom right over there at around 2060. So that would be coming potentially down to that level there during that time frame. When I look here at the daily chart, again, you can see this bounce in here is a little bit stronger than we're seeing in the S&P 500. And while the S&P 500 and the NASDAQ took out this low, the Russell did not. So it's a little bit stronger. I had a note in here that when that previous cycle was forming, that the negative configuration suggests the next cycle will also be negative. So this negative configuration right over here says this one will likely be negative. This projection right there is to that upper level of the two I just gave you, which is at around 2140 or so, 2144 on the way down here. This low right over here projects out to late January. And this is that old one right over here on the Russell, which projects out to mid-February. So I'm not exactly sure which one of those will be in play, but you can see this does not look very good looking at that. Momentum negative right over here on the slim ribbon PO, negative right there. Here on the daily chart, negative. You could see the option bias indicator telling you keep your option positions on the short side. And here you could see it crossed here on the 25, gave you a test. It crossed to minus 25 and turned negative. That means the longer term support that had held the market up is now gone and is, if anything, exhibiting negative pressure. That means the longer holders are in a sell mode when you look at this, and that's going to help it get to that downside targets that we're looking at right over here at 2144, so 2060 right over there as we look at the Russell. So that's a look at those three indexes in a very, very deep look as we look at just the indexes, but I want to show you our indicator bias heat map, which I think is just a fantastic way to look at the market with our indicators. Before I look at the heat map, though, I want to jump into a real quick look at the final. This is our final weekend now, and the time running out. Forgive the gift. So Matt is going to give you a very detailed look at this at the end of the show. And so don't go away if you're interested in seeing a lot about our memberships and an opportunity to get this non-recurring membership just through this weekend. Again, you can go sign up in the holiday specials in the top, and you're going to get gift cards back from us at the lowest prices we ever offer these. You get $20 back for level 2, level 3, you get $50 back in an Amazon gift card, and level 4, you get $100 back in an Amazon gift card. And again, the lowest prices for everything that we bring to you here for level 4. And the reason I wanted to really talk about this is because I want to bring in this additional content that I want to show you. So let's take a look here as we bring in the market monitor here, the indicator bias monitor. What we're looking at here are country ETFs, because I wanted to give you a good example of what the markets look like around the world. And you can see your EWZ, India, China, emerging markets, Turkey, all of them right over here. And our indexes down in the bottom: SPY, QQQ, Diamond, IWM. And this is the MCI, the market condition indicator, the option bias indicator, and the askSlim ribbon, and then the reversal scout. I have them in this order because this is the order of sensitivity. And you can see they're all in terrible shape. Turkey's the only one with some longer term still positive condition in there. But you can look in here, the MCI, look at these numbers. I mean, they're really negative. So you're coming into this beginning of the year with some very, very negative conditions in the market. It's going to be very, very hard to overcome what you're looking at right over here. If the market does get a rebound, you'll see the reversal scout turning green first, and likely that happening while these other things are turning red. If that happens and you can't begin to turn these other things green, these other indicators, then you're going to know you're in a temporary upside move, and you'll start to see them turn red again, and those markets begin to fall pretty sharply. I'm going to move in one more for you to see here, because I think this is so important, using our our indicator bias heat map. And this is, you're looking at about 110 stocks and ETFs here as you look at the what are we looking at? Spider Select, sorry. And you can see in here we have, where's that? There we go. So we have XLE, XLF, XLV, XLI, and XLB, and all of the top 10 heavyweights in all of those. And you can see in here the ones that are actually getting a little money coming into them right now. Of course, energy is strong right now because oil is moving up. So you could see how the reversal scout is the most sensitive and beginning to turn in here. And the OBI is beginning to go neutral in some of these. So there's some better performance here when you look at the energy stock. So I can scroll down here, and you would expect that some of the things that have been beaten up last year, or some of the value things in the value area, might be looking okay. You still have Broadcom in here looking okay, that pattern looking pretty good, Cisco looking good. So you can get an idea of the ones looking at this that are the best. Here on the bottom, you can see money moving into utilities and the flight to safety. That's why these are green right there. And this really gives you an amazing picture of really the top weighted stocks in each of those categories. I'm just going to switch this over to the canned look at futures. So this is these are all of my watch lists that I look at in there, and the ones that say public are the ones that are in Thinkorswim. So again, become a level 4 member. and you'll get all of our charts and information on there. So I'm just going to go into futures right over here, and you'll be able to see this load up. It's amazing how fast and how good this is, as it shows you which of the futures are in the best and worst shape. Here's the indexes up over here, as you can see, all red. There is Bitcoin right over there. So Bitcoin actually has been positive, as you can see, but now in the shorter term is starting to turn negative. We'll see if that can turn positive again, and you can follow all the futures in here. Here's the gold market right over here, and gold, you can see, is red all the way across. So that is giving you an indication that the metals have some problems, and I've been warning about that. Here's your silver market right over here, and you could see silver red all the way across. So this is a great way to see. Somebody asked me about palladium, and I don't have those charts, but you can look right over here at palladium is red all the way across. So great way to really get a good look. Here you can see the grain market and how the grains, this is corn. Corn has been showing up bullish for us for quite a while. And you can see here on the indicators how good they look. So I wanted to give you a good look at that roadmap so you could see that heat map, sorry, with all of our indicators on there. And again, that's a level 4 service for the Thinkorswim platform, and you'll be able to look at markets the way that I just did if you become a level 4 member. So just fantastic. That's everything that I have to show for today. If you're new to askSlim, you can start learning from our team of pros by becoming a member, but don't go away. Stick around. Matt has a special walkthrough right now for you of the askSlim memberships as we get into this final weekend of Give the Gift of askSlim, and he's going to take you through a lot of this, and I really encourage you to give real thought to taking advantage of the best prices that we offer and getting this gift card back Amazon. Team, that's going to wrap us up. You have anything to say before we head out?
I just want to wish all of our members and anyone watching very happy New Year.
Wonderful.
All right, excellent. Great work, everyone.
Yeah. All right, Matt. So we're going to turn this over to you, and you're going to do this special view of our memberships and the final weekend of Give the Gift of askSlim.
Yes, I am. So stick around if you have an interest or questions, because I'm going to jump into it right now.
All right, go for it.
All right. Okay, so this segment, as Slim mentioned, we're going to walk through our holiday specials one more time, and I'm going to do a membership overview, and I'll open up the floor for questions. So this is your chance to ask questions regarding the various membership services that we have within our membership levels. So if you're in the audience, feel free to put some questions into the Q&A, or if you are on YouTube, you can email me directly and I'll follow up with you. This segment will be recorded and put into on YouTube as well. Okay, so we're going to run through those specials one more time. As part of this, though, is I'm going to show you some key framework about why the askSlim services will be impactful to your educational development around technical analysis, and then your ability to implement technical analysis in a practical way for trade planning purposes. And that's really the fundamental mission that we have here with askSlim. Okay, so those specials, again, as I covered them, we have 3 specials. They are for level 2, level 3, level 4. It's 35% off for each one of those. Significant savings for level 2, that would be $38.25 a month. This is non-recurring, $20 gift card. Amazon gift card with level 3 is $50, 35% off. Regular rate of $119 at $77.33. And then level 4, regular rates are $159 per month. That comes to $101.25 plus the $100 gift card. So I'm going to step through each one of these services in terms of membership levels and the highlights that come with those services right now. Before I do that, though, I just want to give us a framework to think off of as we do go through those membership levels. So at askSlim, our services are specifically designed to optimize your trade planning process. So with us, you're going to learn and discover the conditions for successful trade setups that stack the odds in your favor. You're going to learn how to identify key technical evidence. So we have a methodology that generates technical evidence, and you'll be able to learn how to identify directional bias, key levels, timing, and then key signals that suggest that your trade setup is a go. So what we have here at askSlim is a methodology. So that's a decision-making process that we have prepared. And without that, it's nearly impossible to have an objective trading plan, because you have to have this decision-making model that can translate market information into technical evidence and analysis. You see the team deploy our methodology on a regular basis at multiple time frames. So once you have established that analysis, that evidence, we need to then produce an actionable trading plan by converting that information. So what we do is we bridge that gap between analysis and execution, empowering you to translate those insights into actionable trading plans with confidence and precision. So let's go take a look at the services in those levels. Again, feel free to put those questions in the Q&A if you have them. All right, so we're going to jump over and we're going to look at dashboards. So I'm going to look at my level 2 dashboard. Level 2 is going to encompass everything that is included, obviously, in level 1 as well. And in terms of highlights with level 2, I'm going to start off with a couple that we have with level 1. And the first is, let me just shrink this back to normal size, is the daily snapshot. So with the daily snapshot, this is for individuals that are fans of technical analysis and want to use the indexes for a proxy with your the work that you're doing in terms of trade planning, specifically if you're tracking the main indexes. So included in here, as you see here, is the S&P 500, the NASDAQ 100, and the Russell 2000. Those are the 3 indexes that we cover. This is a report that comes out every single day. This goes beyond what we have in our light version. The light version has a portion of this premium report just covering some key components of the S&P 500. This full report, which is in level 1, but part of level 2, obviously in level 3 and level 4, includes all 3 of the indexes. And as I said before, the key is here, these trade planning and trade setup factors. So we need to be able to determine an outlook period, determine a directional bias, identify key levels for entry, where are our exits, where do we reevaluate, and we need to be able to formulate tradable edges with positive risk reward ratio. So these are sort of the key fundamental factors that you want to have in place, and that our information is going to help you answer as you go through your process. And then obviously you need to be able to decide what are those signals that are going to confirm for you that the trade setup is a go, or when to add, reduce, or close that position. So we can help with answering these questions based on the technical analysis and technical evidence that we provide, and also the consultation that we offer as educators in the trade planning area. So it's getting back to that daily snapshot report. There's the 3 indexes that we cover. And I produce this report on a regular basis every day based off of the charts that Slim is generating. And then I also do charts in the 2 hour. So I'll show you those in a second. But you're going to get a sense of what, based on our methodology, what is the current short term. So this is more of a short to intermediate time frame look. And we talk about the different time frames within the report, but with a heavier focus on the short term, because that's where we have found that many of our members, or most of our members, like to understand that short-term outlook, especially if you're an active swing trader. So we do talk about that bias. And then in this noteworthy update section, key technical overview, recent analytical developments, you're going to get the primary information from a technical perspective that's going on. So you're always on top of where the markets are from a cycle analysis perspective, where they are from a key level perspective, where they are both on the short term, intermediate time frames, and where would things change. So in a pretty quick summary, 5, 6, 7 bullet points, I typically review those key recent analytical developments. And then this is where we take it a whole nother level, where I go over market scenarios for the shorter term, key levels, projections, activation triggers when it comes to projections. So this isn't just about, okay, let's go through the analysis, which is incredibly important, very educational, and then providing a projection, which is helpful and important. But then it's taking it to that next step, is when are these projections in play? When are they in motion? When are the conditions suggestive that if we do have a projection, that that projection, the price action is in motion for that to happen? There was can people out in the audience just do a quick technology check? Can you see my screen out here? You should see the daily snapshot screen. Okay, there was someone who's mentioning that they were not seeing the screen. Okay, all right. Want to make sure we're all good here. All right, so daily snapshot. So I'm going to give you a quick look at this live. We're going to go live to the S&P 500 because what I've identified here in terms of short term, so this is looking at the next 1 to 10 days, is I have conditions are misaligned for providing some projections. And I want to look at the actual charts to show you why that is and how and what would change that. And again, the important thing is determining what's your outlook period, because that is going to be very critical for the time frames of the charts that you look at, setting your key levels, setting your bias, and essentially trying to find that profit opportunity, which is really what we're after. Is how do we filter the information at specific time frames to know if we have an edge, to know that we have something that we can work off of, where we can execute a strategy around that has a high probability of profitability. And that's really what you're after. And again, it's about odds. It's not about certainty, because there are no certainties out there. And what we can try to do is stack those odds in our favor. So what I have mentioned here is that initial target zone, secondary target zones, the conditions are misaligned, so they're TBD relative to what you see here in the downside scenario. So I do upside scenario, downside scenario. And you can see in the downside scenario that these projections, which I update as things change on a regular basis if there are changes, and then when things get satisfied, reached, so you really get a consistent and continuous sense of where we are in terms of the price movement relative to projections in a specific time frame. All right, so we're going to go look at the upside scenario, the downside scenario right now for the S&P 500. Let me pull that up and just confirm in the audience that you can see my multiple time frame grid here. I want to make sure that that is the case out there. Okay. All right, so we're looking at that short term in the S&P 500, and I had indicated as of yesterday, so yesterday afternoon or after the market closed, yesterday evening when the report was posted, that the upside scenario right now, the projections were TBD because the overall conditions are misaligned. So what we do here is we're very focused on the pattern structures of the cycle configurations, and what we're looking for are alignments based on several technical evidence aspects. And right now, as you heard in Slim's presentation of his analysis, what we have are negative conditions in these shorter and even in the intermediate momentum, not in the intermediate cycle structure right now, still positive, but our intermediate momentum has turned down. That's on the weekly chart over here. If we go to the daily chart, you can see both the reversal scout and the slim ribbon have turned down. The cycle pattern structure we had yesterday slightly violated that cycle low support. So that's negative. Okay. And then we move over to the 2 hour, and what we have is negative momentum conditions in both reversal scout and the slim ribbon. Now, as I published last night, we had closed somewhere right around here. So we had closed testing a key short-term 78.6 fib extension. We also had tested and violated slightly the prior cycle low support. And it's really not surprising then that you get a bounce, because anytime that you are, well, first of all, the conditions we have where we have a conflict going on between the intermediate positive overall structure. So the bulls are in control from a pattern trend perspective in the weekly time frame, compared to the bears who are in control on the shorter duration time frame. So you have this battle going on between money flows right now, between those bulls that think that this is a great opportunity. Every time that there is a key level of support that is tested, money flows in, right? Plus, we have now, beginning of the year, there's likely automatically money that flows in. But those conditions were not aligned to have any projections at that time in that short term because of the negative overall bias. Now, that doesn't mean if you're an intraday trader, there isn't opportunities. So that's why it's really important to know what time frame you're looking for your opportunities. And in that short-term duration time frame, because of our style, we're looking for participation in the dominant directional move. The dominant directional move is not to the upside, was not to the upside yesterday. So even though we get this pop right now, until we would have the reversal scout turn up and we'd like to see that slim ribbon go neutral, that could signal that there is a near-term low that would be in place. And if that happened, then I would look to add in some projections on the upside. But until that reversal scout turns up, right now we don't have conditions that are in alignment with the overall directional bias that we're seeing. And again, that's a near-term, short-term play. If you were a intermediate time frame trader, yes, this could have been an anticipatory, more aggressive opportunity as you test a key support level. But when you're doing trades like that, you want to look to keep your position size smaller when you have other factors that are currently negative, because right now it's saying that the trend in the short term is down. And until we see that change again, the odds then favor of retest or a breakdown below the current cycle low support that was violated that we just had here. Now, what would change that would be a close back above the 61.8% here at 6,004. If we saw a close above that level, then that would suggest that this pattern has now, this negative technical damage that has been done, has been neutralized, and that would put in a condition for a continued rise with a potential challenge of that 78.6. And as Slim and Katie pointed out, we got up to that 78.6 and started to get above there, that would repair this overall condition. But until that happens, we have a negative bias in place. We're into the minor resistance zones right now. But if we get that, if you're a near-term trader and we get a turn up in the reversal scout, if we have, if the slim ribbon neutralizes, you'll see me then add in those upside projections. And then what we might be looking for, if I zoom in here, is a potential rally. Let's say right here we stall and then we pull back, and that pullback looks to get contained in the 38.2 to maybe the 61.8% fib area. Then I'll look to have some projections that might look something like this for a near-term opportunity. So in terms of that 1 to 10 day time frame, that's what I'm looking at in the daily snapshot in terms of those levels. Are that 1 to 10 day time frame, and seeing if we have conditions that are suggestive of that opportunity. Right now, we still have a negative reversal scout, as I said, negative slim ribbon, negative conditions on the daily chart. We have to wait to see that set up. Then we're watching to see if we get that. There's a lot of patience that's involved. You know, Slim gave the analogy of like a tiger or a lion. You're waiting for that opportunity, and you're watching for those conditions to present themselves where you have a high probability setup. The only thing that I saw that would have gave some possible logic or confidence for a rally that we're seeing or a bounce today is the fact that we tested that key short-term 78.6%. And I'll show you how I identified that one. So when we're looking at these, Slim talked about as part of our methodology, we do the swing high, swing low analysis using our Fibonacci tools. So I want to look for 3 key anchor points. So I have an anchor point up here on the S&P. So I'm up here on the daily chart. This is a swing high. Then I look for that swing low that we had previously, and then that rally where we failed. So we had another swing high up here, and then that gives me some downside projections. And if I zoom in here, you can see that the reversal scout was still negative at that time. And with that negative reversal scout, even though we had this rally, that was a sign and a signal that that rally was not decisive enough to change that overall momentum. And once we had that momentum roll over, you then have to be paying attention to those next key downside targets. And one of those would have been that 78.6. So that 78.6 extension right here was hit yesterday. And you never know when those buyers, whether those are those individuals that are covering their shorts or new buyers that look to enter based on these key levels, come in, and that was strong enough to get this bounce that we're seeing right now. So this is the kind of analysis that we do, and then going beyond that, how we convert that analysis into actual trade planning information that you can make your decisions around, right? And so right now we're sort of waiting. If you were a intraday trader, it's a different story. You know, we have an intraday service where there was an opportunity today where you can see momentum on the slim ribbon, momentum in the reversal scout on the 15-minute, both went positive on today's gap. When you get that pullback then, and we have a multiple time frame analysis that we do in our day trader service, looking for larger intraday swings. So this would be, we're not looking for scalping opportunities. We're looking for these intraday, longer, broader swings. Then you would have seen today when we had this rally or this pop, I would gap higher in the morning on the first 15 minutes. That pullback, yeah, it sort of chopped around a little bit. We got a little lower than the opening. And then you can see here, though, that the reversal scout plus the slim ribbon, those did not go negative. And then we got a slim ribbon PO fired a continuation signal. And then we had another nice move off this low. So, same thing. If I'm doing my draws here with my fib extension tools, this energy from this move suggests that there's an opportunity to get up into this next level, this next zone up here. And these yellow zones represent what we call our acceleration zones. These are where there's price vacuums. And I identify these every single day. And that's in our level 2 service. It's also in our day trader service. You get the actual grid if you're a level 4 member. And these are high probability areas where when you have momentum that are in this going in the same direction of the yellow zones, then you have a high probability of fulfillment of anywhere from 60 to 100%. And that is quite consistent, the case in terms of those odds when you get into these zones. So it's all about identifying your analysis within the right time frame so that you can identify if you have an edge, an opportunity to take advantage of. And you have to be consistent and disciplined with that. If you're a reversal kind of trader or reversion to the mean kind of trader, well, then you might be looking for key levels that are tagged, right? And once you see those key levels tagged, then you believe that there's a reversion back to a mean point, which might be a 50% retracement. And, you can use our services to help with that. So primarily we look at directional opportunities, and those directional opportunities are in alignment with the primary trends that we're looking for. But however, you can use our timing tools, and you can also use our key level areas if you are someone who looks for these reversal opportunities. And in terms of reversal opportunities, Slim talks about, and all the analysts talk about multiple time frames, and we use certain indicators to help give us a sense of when these reversals could be taking place at different time frames. So when you have the 15-minute reversal scout turn up, that is the first domino effect that would suggest that this could be a near-term low. When you have the 2-hour reversal scout turn up, that could be the first domino that suggests maybe there's a near-term low that's forming. And then when you have the reversal scout in the daily time frame turn up, that is the domino that suggests that maybe there's a minor cycle low that is happening in the weekly of some duration. So that's how you can look at those. So once this turned up, and this actually turned up yesterday right at the close, that gives you some indication. Is there a certainty? No, but it does give you a probabilistic indication of a change in momentum. When there's a change in momentum, that can indicate that you have key lows that have taken place. So I wanted to spend a lot of time going through that because this is the depth of the information that is included in our services. Our report goes through these key areas, these key zones. You also receive the charts. So in the daily snapshot, now these are static charts, and in the levels as you go higher, excuse me, you're going to be able to see live charts, and then with level 4, actually get access to these charts that you can import on your own. But in the daily snapshot, every single day, you're going to get the update. So in that update, just like I was showing, it's going to have the key levels. You're going to see our indicators, and you're going to be able to get a sense of how we're viewing that market action. Not only how we're viewing it, but also an explanation of what's going on. So really what this is me taking the time to go through as an analyst and as a trader. It's almost like my own technical notes and how I would put together my own trading plan on the upside, on the downside. So you get this bird's eye transparent view of how professional analysts and professional trading strategists go through their process. And that's an incredibly insightful opportunity that you would have. It does require investment of time, but if you have an interest in that sort of intellectual journey, that knowledge development, then seeing how you transition it into practical application, that's really what you're going to benefit with askSlim. But we do the same thing on all of the indexes. So here's the Russell. I go through the 2-hour chart. Slim shares his daily chart, his weekly chart. And then there's also price projections that I do. In the short term, I do above, and then the intermediate timeframes and longer duration timeframes I do here. And we also show what the conditions are. So again, this is like a journal of my technical notes, so that I have really solid logic for the decision making that I'm putting into here, and it's fully transparent to our members. All right, so that's the daily snapshot. That's with level 2. I'm going to go over and show you more that's available in that level 2, touching on key services, highlighting key services. Another one here is our Slimulator momentum tracker. That's this one here, this green button. And with the Slimulator momentum tracker, this is really for longer term position traders and active investors. And this is has an algorithm that combines multiple time frames, but the focus is for investor outlook, or like I said, active position traders. So if you are more active with your investments and you are a position trader, this is a great tool to do a cross check with how our momentum indicators are showing the current conditions. So I'm just going to go into, and we have so many pre-established watch lists in here. It's really a fantastic tool. So let's just go jump into, let's see here. I'll do S&P 500. That's a broad one, obviously. So I'll just go in there, and it's going to take a few seconds here to load, and then you'll see this list. So what I can do with this list is, number one, probably the most efficient. So what we want to help you with is efficiency and effectiveness as you try to either cross-check your own analysis, or if you're looking for ideas, right? So you're looking for opportunities, high probability setups. That's what our service is going to bring to you, is this efficiency and effectiveness with both finding ideas, understanding why we consider these to be high probability, learning how to do that for yourself or expand that horizon. If you already are a pro, we're going to still save you a whole lot of time. We're pros, and this just is really designed to help us as analysts and traders to be much more efficient and effective with our time. And you can do that as well, even if you've had 10, 15, 20 years of experience. We have, I would say, almost 50% of our members are very experienced, and they use this to help find ideas faster, and also just to do a cross-check with their own analysis. So you click on the directional bias here, and it instantaneously is going to generate whether our momentum conditions are showing a directional bias of bullish or bearish or neutral. And we use 3 different time frames, 3 or a various set of indicators that are combined together to give this outlook. Okay. And so you can see here the lists that are very bullish, and then I can go to the lists that are very bearish. And then also, if you click on the arrow here, which will open up another area, and we have a change log for the directional bias. This is helpful too, because if you click on the chart, you can see this smattering of indicators, arrows up and down with P's, M's, and N's and thickness of the arrows when there are changes. So you can quickly get a sense of how is this changing over time. And you can see here, FCX, remember, this is a longer duration outlook. In November, it finally, well, there was another indication here in August, but otherwise it was very, very positive. And then all of a sudden you can see it started getting lighter in terms of the indications here of strength from a momentum perspective. And then we had a shift to neutral, and then a slightly bearish shift, and then we had a bearish shift here that occurred in FCX. So if you're someone who wants to trade within the dominant momentums, this is a fantastic tool to assist with that. And you can see here that we're in a negative condition in FCX. So this is the Slimulator Momentum Tracker. It has several pre-established watch lists in here. You can click on any of them. You can sort very quickly and find symbols that may be of interest to you. And then you take that symbol and you bring it over to your chart and you step yourself through a process. So I'm going to do a couple of examples of that. If you're out in the audience right now and you want to see me do that, go ahead and put some symbols, a couple symbols into here, and I will do that at the end once I complete a review of these services, so you can see an actual trade planning process in live time. All right, next up, we're going to jump into level. I'm going to look at level 3. Right, I'm sorry, I'm going to stay in level 2 here for a minute. That was, the key ones in level 1 that actually are available in level 2. But for level 2, so I talked about daily snapshot. I talked about the Slimulator Momentum Tracker. A couple other ones I want to highlight is FutureSpeak. So FutureSpeak is a collaborative service between RV and Slim. Slim will go through, he goes through 6 segments of the futures market: stock indexes, treasuries, FX, metals, energies, grain, softs, crypto. And what you see there then is energy futures, currency futures, precious metals. You can see all the symbols that are covered. Okay, so I'm going to just scroll through here, all the symbols that are covered. And what happens is Slim does the analysis, weekly, daily analysis for all of these symbols. And then RV will prepare a video and he'll talk through that analysis for each one of these. And I think that this is where you can really get a very immersive opportunity to understand our methodology. It's the charts from Slim, it's the analysis from RV, and you get this every single week. I mean, there are a few weeks out of the year where we don't publish the FutureSpeak video, but this is an excellent video to learn the methodology and also find ideas. Again, you can find ideas within here, and this is our FutureSpeak minutes report that comes out after FutureSpeak is completed. It's a couple 3 hours after that usually, and you can click on a symbol. So if I click on, let's say, dollar here, it'll pull up. It pulls up the highlights of that specific video, the exact place where RV talks about it. You're able to find that information. So it's, again, very efficient. I mean, there are the ads on YouTube that pop up, but you can skip right through there and you can get right to the overview of that specific symbol. All right, so level 2, FutureSpeak. Also, there's videos in level 2. We have a trader library, and we also have ongoing fresh content that comes out. So inside we have trade planning videos, all of the trade planning videos that I prepare. There's an archive of those. Then we have an archive of all the videos, including, there's probably 300 or so videos that are prepared, that are evergreen videos that Slim and RV have done. And you can see, the list of them here. There's this, here's a great one, being bull or bear agnostic. There's one about continuations and gaps, counter trend trading versus contrarian trade. There's just so many here that Slim and RV have produced over the years that are of great value when you're just, looking for something to learn, add to your methodology, your own, or just learn something that you want to call your own in your own way. Is a great way to start putting that stuff together. And then another service in level 2 that I think is really important to talk about is RV's office hours. So office hours with RV are have become incredibly valuable, incredibly important to our members, because this is an opportunity for our members to request symbols from RV. So through Discord, which you also receive if you're a level 1 or higher member, there's an area in Discord where you can request from RV symbols. So if you're a level 2 member, you can request a certain number of symbols. If you're a level 3 member, you can request. You can see requests coming in right now from various members. There's a cap of 15 symbols per week, but typically over the course of a month, everybody will get you know, a symbol that maybe you thought of, someone else already asked about, and RV goes through, he does the video. The videos are very well organized, and you can see here that there is chapters, right? So you can find a symbol of interest, again, very quickly, that you might be interested in. Again, this is a great way to learn, but it's not just about the learning, it's about applying. So RV is going to talk about why or how the directional bias might be negative or neutral or bullish, but also why there's projections like they are based on time. And he steps through that, also posts the charts. You click on that and you can see the static chart that is posted for that exact symbol. So office hours with RV is a very important feature or service in level 2. And then there's also Charts Hub. So don't want to forget about that one. As part of level 2 and 3 and 4, you get access to the Charts Hub. Charts Hub is static. All of our charts in our focus list that are both we do weekly and daily analysis. And within that focus list, there's about 84 symbols. So the Charts Hub available in level 2, you click on the symbol, it's going to default to the weekly. Then you can click on daily, you can see both of these together. And really what you're trying to do is that this is a great tool for, again, for generating ideas or a quick cross-check of maybe our cycle timing. So maybe you're after, you know, where are we in the cycle, right? So if I click on Apple Weekly, you can see here that a cycle low occurred. You know, we had a rising phase, and that rising phase, we made new highs into this fib extension zone, pulling back from that fib extension zone now into some support. And from there, you can see there's still a lot of time to go in Apple. So unless Apple really has a breakdown, odds would favor them that it finds some support here soon, and then we'd see another rally. So as you try to understand, okay, well, when could that timing be? Well, that's when you can go then to the daily chart. Well, the daily chart though shows that there was a cycle breakdown right now. So that's helpful because that's going to bring a little bit more caution into the overall pattern here in Apple, because now we have a conflict going on. So you have the conflict, just like I talked about earlier, you have a conflict in Apple as well. The longer duration holders, in terms of intermediate and monthly chart holders, the pattern is still positive. But in the short term, you know, the pattern's gone more negative, which means you could have some higher volatility coming into Apple. That's why we have some higher volatility coming into the markets overall. And I'm going to watch this one close because Apple's likely to see a bounce. I have to look and see what it's doing today. I can pull that one up, and you can see that here there could be also there's a half cycle, and there could be a quarter cycle, and the quarter cycle timing would suggest that right around now we could see a bounce. But overall, there is some vulnerability that's come into Apple based on the pattern. So these are the static charts. And then with that level 4 membership, you can actually open up these live, and you can do some evaluation of your own within that. So this is what you're going to have with the Charts Hub, all the charts daily and weekly. And then within the level 3 membership, so I'm going to jump into level 3 membership now. You also then can get into cycle low dates. You also have, so there's additional features. You have the cycle low dates. You can also get access to the cycle counts, so how many bars, so that you can recreate the cycles for yourself on your own platform if you don't have access to the TOS platform. So that's very helpful, insightful information there. And again, this is for all the symbols that we cover. So you get the weekly chart, daily chart, really great information to work off of as you're learning, as you're trying to find ideas, as you're trying to enhance your own methodology, as you're trying to see how pros, experts, with thousands and thousands of hours committed to this craft go about their work. Okay, so that's the level 2, along with a couple of those little features here that level 3 members get access to. I'm going to jump back here. We're going to go look at some more in level 3, because level 3 really brings a whole nother level of raises the bar in terms of analytical tools, trade planning tools, and services that you receive. That's level 4. Let me go to level 3 here. All right, so level 3 brings in these hubs, we call them. So there's an equities, ETFs, and VIX hub. I'm going to look at the indexes and the futures hub here. So essentially, at a glance, at an intermediate time frame glance, you can see the bias based on our intermediate cycle analysis. And right now, in terms of the index, you can see that bias is more or less neutral to negative right now, based on the reflection of the intermediate cycle analysis. And then obviously, if you have green, that's positive, yellow is neutral. And if you click on the headers here, you're also going to receive notes that Slim puts in. So that comes with the level 3 membership in the Futures Hub. Level 4 members get those notes emailed out directly. Typically, there's one update at least per week. If there's major changes, then there's more updates that will come. And so that's inside of here in this section here at the top. When you click on the symbol, again, we try to make things as convenient as possible. You're going to be able to have access to the charts, the video analysis that starts immediately for that specific symbol. Again, so that's super convenient. So if you wanted to see the video analysis that was done in FutureSpeak for crude oil, you can click right there. It takes you right to it. Very, very, very convenient. If you're level 4, there's the toss link to the grid that is available for that set of symbols. All right. So that is the hub, one of the hubs that we have, Futures Hub. Another one is our cycle, let's see here, the cycle low timing tracker. So the cycle low timing tracker is another helpful tool. Obviously, we focus on cycle timing here, and this one helps to define that on a more granular level. And what it does is it has 3 stages of timing tracking. And the first is that cycle low timing window. So you hear all of us talk about that window. And if I pull this back around here, just so those of you that might be new to this, in terms of the cycle low timing window, it's always the same amount of time. Once we've established a cycle bracket, then it's simply 3 bars to the left, 3 bars to the right gives us our cycle low timing window. And once we have that, that's what we call our period of risk. That's when we're looking for a low to form. And it tells us a lot, because if a low forms and it is a positive configuration, meaning that the low that forms here is higher than the low that previously formed, that's a positive configuration. And also, depending on where that low is, does it continue in terms of what you would expect? Like right now, based on this pattern, it would suggest that there's a higher probability of a retest of the low. That's what the pattern would say right now. So you would watch this period for that risk coming into play. So the cycle low timing window is going to go through these 3 stages. You have simply when it's in that period of risk, or when that risk is coming up. There's also the little color coding which lets you know what the current condition is of that directional bias for those. And if you click on the symbol, you can quickly get to the charts. And then once there's enough positive price action that suggests that a bottom is pending, we will then indicate that in this timing tracker. So this is a very helpful tool that lets you know that there's been enough positive price action that says the probability of an anchor low is likely in place. And then once you get bottom confirmed, that lets you know that there's even more positive price action that's in place. So that's cycle low timing tracker. There are a few other tables in here when there are symbols that are extending out, when there's symbols that are in sync, both the daily and weekly. I know there's a lot of terminology. So we have to think about this as in terms of any kind of a methodology or theory, there's going to require a good investment of time. Think of this as a, almost an MBA kind of experience in technical analysis and trade planning. And so there needs to be that commitment of time. You do have a lot of support from the members, and we've already pre-established all of these tools, all of this information, and we have a lot of resources to help with your development process. So this isn't something that's overnight kind of success. This success is going to come from a commitment because you have a strong desire to be to understand and develop a methodology for yourself where you can be disciplined with your approach to making decisions around your trading strategies. And I think that's really where we, as I said before, we bridge that gap for our members quite strongly. Okay, next service here, talked about the cycle of timing tracker. We also, Katie leads a membership service on, where are we here? Right here, we have a service for options trade planning right up here. So there's a trade options trade idea video. She does follow-up videos after she's posted a video. There's an idea tracker that we have there. So these are videos probably once a week that Katie will produce that has an option strategy attached to her analysis. So this is a great way to see our analysis and how that can be applied to options trading. And we also have trade ideas. There's also a trade ideas feed on Discord. So there's a section here called trade ideas that RV manages. And we put trade ideas into a queue. Those trade ideas have a trade idea template. So again, everything here is very granular in terms of so that you have clear understanding of the approach, of the logic that goes into converting analysis into trade planning. And you get to have that with the analyst team here. So there's a great template for each one of the trade ideas. And then there's also videos that get produced for most of the symbols. Sometimes there might not be, but there are videos. You can see here, there's a 7-minute video on the trade idea and Melly that RV produced. And in terms of the logic of why this would fit a trade idea in whatever type of bias and time frame. And then also on Discord, there is a section in here. Let me get to it, make this a little bigger so I can see it. We have a trade ideas feed in here. Okay, so there's a trade ideas feed. There's a trade ideas Q&A back and forth where RV will post things that he's seeing and looking at. So it's a great way to, again, track ideas as they come up, and then also to be able to ask questions around those ideas. All right, last thing inside of the level 3 membership, or two things that I wanted to highlight is there are requests that come in from our level 4+ membership, and you see these over here on the right hand side. You'll see this one here, level 4+ chart request Striker Corp. And level 4+, which is the highest level, it's not even publicized because it's on a case-by-case basis where there's seats that open up for members to fill out an application, essentially to be able to get access to it because of the amount of effort that has to go into it, because what we do is manual analysis on the symbols that get requested. So it's a custom symbol request. But the cool thing is level 3 members get an opportunity to see all of those. So we have an archive. They don't get direct access to the TOS link, level 4 members do, but they do get to look at the symbols that are requested. And it's quite interesting to see all the various symbols that level 4+ members request. Again, what does it do? Well, it gives you a chance to get your hands on other ideas that may fit your analysis style or things that are setting up. Like as I look at this one right here, so we're in a timing window for a low for Striker, and then we're supposed to get into a new rising phase. We'll have to see if that plays out in Striker here. But that tells me, I have to monitor for some potential weakness, but then there should be a decent rally that might take place in Striker as as we complete this. This was at least as of when this came out. This came out on January 2nd. But I always am looking at the freshest information by looking at live data. But again, this just gives you a chance to look at interesting symbols that other members have requested that are part of our level 4 plus membership. Again, the level 4 plus chart archive, all of these symbols are available for the level 3 members to take a look at. Okay, let's move on. And let's see what's left in level 3. Level 3 is going to give you access to the MCM. So the MCM is our market conditions monitor, and the level 3 members get our the standard version of that. It was up here, and then there's a pro version that our level 4 members get. I'm going to go into the pro version and just show you the differences. So the level 3 version has trader types that go from intermediate, short term to near term. The intraday is not available, but you can sort by time frames. So you can look at all of these symbols here, and you can get a sense of in each time frame what the momentum conditions are. So the market conditions monitor right now is based off of our momentum indicators, and it's in real time. So unlike the ranking system and the Slimulator momentum tracker, those get updated after the close. This is getting updated every couple of minutes. Every minute, essentially, there is a calculation going on via our proprietary algorithms that we've built using our data feed, and we're getting these outputs that we can look at. Now, again, what are we trying to help you accomplish? Well, we want to answer those key trade planning questions. So time frame, directional bias, right? And you absolutely get a chance at that with the momentum, the market conditions monitor. So if I go into the trader view and I want on my time frame I'm interested in, let's say is near term, I can sort and I can see which symbols are starting to show some positive price action in this near term condition. And you can see a change log of the most recent changes that are occurring. You can sort by bearish or bullish, and then you can go from there. And then again, another key question is, how do I know when something's changing? Well, what you can do with the market conditions monitor is, as a level 4 member, you get our app. So we have an app where you can set your own alerts, and I'll just show you what that looks like on this version here, this admin version that I have. You can start putting in your own alerts, and then when you have messages that get triggered, they'll come up in this feed. So then what I typically do is I'll have this little mess, and I cleared it out before this presentation, but I'll have this little window opened up on one of my monitors, and I'm sure most of you have multiple monitors on your desktop. And then once I set all my alerts, I have this little feed that pops up to let me know if the changes are happening. Also on my computer, as long as I accept the notifications, they will pop up in my typical a notification area that I have with the PC. So this is extremely helpful as part of the trade planning process. So if I was interested in one of these symbols here, then let's just say I wanted to look at let's say I wanted to look at Boeing, and I wanted to know when it was shifting to slightly bullish, or slightly bearish, or bearish. And if I was doing analysis on Boeing and I wanted to look at the potential for a long side opportunity, and I didn't want to stare at the screen all day long, and I wanted to be notified when there's enough change happening in the short-term conditions, then I can do that. The first trigger or domino again would be in those shorter duration time frames. So I might even look at the intraday, even if I'm not an intraday trader, but I wanted to be notified when there was a change in Boeing. See, right now it's very bearish, so it's out of my radar. But let's just say that I want to be notified if it goes from slightly bullish to bullish in the intraday time frame, because I have an interest in a near-term or short-term long side position. And I don't want to be buying it when momentum is saying that it's negative and it could be falling, I want to pay attention to it once it starts to show, some positive price action. So that's what you can do with the Market Condition Monitor Pro, is you can set these alerts for yourself, and they are extremely helpful. And then that moves into level 4, where with level 4, the huge differentiating factor is the MCM with the app, and then also the fact that you can get access to the grids. So with these grids, let me see here, I'm going to go into Boeing just as the example now. And if there is a symbol that you'd like me to review, go ahead and I'll step through the whole process and then we'll close it out. But again, level 4 is you get all of our grids that the analyst team uses in terms of analysis, and then these setup grids. So these are trade setup grids. So at a glance, my goal is to be able to see what the conditions are and help me decipher if I have something setting up. And so as I look at Boeing right now, since I step myself through, this weekly, daily, 2-hour, 15-minute, and as I mentioned before, if I was using the momentum, the market conditions monitor, and trying to identify momentum, right now, it's very bearish in the intraday. Near term is bearish. So if I wanted to look for a long side opportunity, then I might click on slightly bullish and bullish to be notified. And why would I even do that? Well, it's because they're still positive. This price action here was quite positive in the weekly and in the daily. Obviously, we took out a high there. We took out multiple highs in Boeing, so that could be setting up. But what I don't want to do is try to look at a long side position in Boeing while the momentum is clearly negative. And also, it tells me that if I was a multiple time frame trader, it brings my attention to the patterns that are happening, and maybe there's a short side opportunity that I can take advantage of while the long side opportunity starts to develop. And there's nothing that says you can't do that. So again, there might be an opportunity in the intraday, might be an opportunity in the near term, while you wait for longer duration timeframes to set up. Because right now there's several indicators that are showing more positive indications in that longer duration, that intermediate time frame, than negative. You can see that with the momentum. You can see that with the pattern here in the short term, although obviously this looks like we could hit a minor peak or short-term peak here. The overall pattern will stay positive until we would have some key levels that would need to be violated. And right now, this looks like it's just in the midst of a pullback where where we have testing that third band of the slim ribbon, and you could get a pullback here, maybe 165 and 159.74. There's a prior peak right here. Probably find some support in that area. But right now, based on this little pattern and the fact that we're negative in reversal scout and in the slim ribbon, and we had this impulse wave down. So this is how you can use all these time frames. This tells me that the buyers might not be coming out until we got down to maybe 168. So there's there's a near-term play here on the short side potentially in Boeing, and then I could have my stops, close to some of these swing highs that happen when the reversal scout went negative. So you have a decent risk-reward opportunity as you look at Boeing. And especially if we can get down into this 78.6, which you can see is pretty close to that 38.2 off of the daily. So this fib extension draw, sets me up with some targets on the downside. And then I'm cautious because the overall patterns are positive on the daily. And so I wouldn't be too aggressive on my expectation on the downside with Boeing, something in that 38.2 to 50. In the short terms where we could see some support, and then watching for that to turn back up. And if it was, that could show that it could be another rally attempt in Boeing. I mean, this engulfing pattern here is not the prettiest. So at the moment, there's some weakness that came in the pattern that keeps Boeing vulnerable to these levels that I discussed. So this is sort of how you go through the process to put it all together, is that you can use these tools to very quickly get a sense of directional bias, right? Based on momentum. And, let's say I wanted to find something on oops, I got to take Boeing out of there. Now let me just do very bullish. So there's very bullish, USO, Pfizer, NVIDIA, GDX. So now what I can do with that is I can take a look at, let's just say Pfizer. Like what is momentum? What are the momentum insights saying about Pfizer that could be interesting here? So I'm trying to clear all these out. So you can see on the weekly, daily, 2-hour chart, momentum is positive in Pfizer. Obviously, that the pattern structures here from a intermediate time frame, bigger picture are more negative, as this was in a pretty strong decline. As I look at Pfizer, just trying to see here if there would be anything interesting on the long side. It's already got up, so you got to be careful of the fact that it's already up into that 38.2. There could be an opportunity up into that 50. I do one more draw. Just try to find a confluence. See, there's a confluence right up here, which would probably be a magnet to the price action, but also would be a magnet to potential sellers. So this would be an area of interest here that I'd be watching. We have an indication of a potential continuation. So the slim ribbon PO is firing that there could be a continuation of an upside move. And then we have OBI is positive. We're neutral here on the MCI, negative on the weekly slim ribbon. So there's a lot of conflict going on in Pfizer. The near term, short term picture, I would call it more slightly bullish. But then as you get into the intermediate time frame picture, it's more negative. So that would say, just in theory, that you would struggle. You would see the price action likely struggles that got into the key resistance zones, likely not being able to pull through it. And so the initial targets have to be more tempered, right? You have to be more conservative. It doesn't mean it can't all of a sudden take off and, a week from now it's at 28.5. Hey, that can happen. And if it did, that would catch my attention to suggest to me that, wow, there's a lot more buying interest than expected based on the current pattern, and that things are turning more and more bullish. And then on the next pullback, as long as we don't get a key violation of levels, if momentums can hold, we might get another rally up to another key level. So what do I see on the upside right now? I'm going to go into my 2-hour chart, right? Because I'm talking about near-term opportunities here in Pfizer. So I want to do my analysis then in the near-term time frames. So I'm going to be focused in the 2-hour here, and quickly I can see a nice little pattern here, and that would give me some targets on the upside. So I have these targets here about 27 to 27 in a 2740. Right, so this is a range. So again, for a near-term trader, if you kept your stop really tight, maybe you can find a nice positive risk reward, and you would go from there. I could see this, that I don't want it to get below maybe 2650 or something, and then that would take me out. But if it didn't, then I could, the opportunity in the upside to 2027 to 2740 for a near-term trader looks valid at this point because of the overall momentum conditions as a near-term trader. As an intermediate time frame trader, we have something that suggests that this is an important low that formed. However, the pattern is likely still negative, and I have to be cautious that as it gets up into these further fibs up on here, that there some sellers could come out, and if we didn't get a close above, let's say, the 61.8. So I'm going to clear these out one more time and show you where I would look to say, maybe I would look down the short side, right? I'm always looking at the scenarios, both upside and downside opportunities. I don't have one right now that I want to take advantage of on the short side, because if I'm a directional trader and I base my decision making off of momentum conditions or patterns, then I don't have those conditions right now. If I'm a reversal trader and I'm looking for a reversal and a move back to, let's say, the 50% fib as a mean reversion kind of setup, expecting this to be quite choppy, not believing that Pfizer has much more room to go, well, then I would be looking for the reversal scout and the slim ribbon to go negative, And then I would be looking for, where those levels could be on the downside. But I have to keep in mind that right now, the momentum is positive. So if I'm doing something like that, where I'm doing reversal trading, I'd probably keep my position sizing smaller as we're dealing with these positive conditions here in the short term. All right, so getting back to the topic of where you could see that important resistance and then an opportunity for some short side strategy would be as we get up into that 50% to 61.8. And if we didn't get a close above that 61.8 and we got a pretty sharp, decisive, a couple day move away from that, and that could be setting up for another pullback as the battle of the bears and the bulls really would continue. And we might see, if we got up all into the zone here, then you could see a pullback. This looks like it'd be a magnet level here. So from 28 to 26.78. So it's a constant evaluation of the price action. How do I translate this then into an objective trading plan? So you take these variables of information and then put it into your trading plan. Obviously, you want to be very consistent with your money management rules, your decisions around position sizing, so that you can reflect on all of those trades at a later time to see how those play out and see if there are any refinements you need to make to your methodology. So this, what I'm showing you here, is all part of level 4, where you get direct access to these grids. In level 4, I do trade planning videos just for level 4 members from time to time, and then I do trade planning videos usually on a monthly basis for all of our premium memberships, and then share those videos with the level 2 through 4 members. But as I said before, you not only get the methodology education around technical analysis, and then a specific approach to technical analysis, but then also taking that technical analysis and being able to apply it in real time for trade planning purposes. So it's a very comprehensive membership that you get with askSlim. It's probably not like anything else out there in terms of that direct relationship with the analyst team, almost like having your own technical analysis firm, trade planning strategist, and then being able to see the tools that the team actually uses. So it's a really unique opportunity. And if you're very serious about becoming a more comprehensive trader in terms of using technical analysis as your guide when it comes to your decision making, then I think askSlim really is going to give you those key insights. And then even if, like I said before, if you've been a pro for 10, 15 plus years, this is going to save you a ton of time, because it's like you get to see the work that traders do or technical analysts do, and we share that with you. And so it's going to save you a ton of time when it comes to finding ideas or cross-checking your own analysis and information. All right, everyone, if there isn't any questions, I've covered everything that I've wanted to during this segment. I hope it was insightful. As we said before, happy New Year. Hopefully you have a very prosperous and healthy and enjoyable one. And we look forward to having you join askSlim as we continue to expand and enhance our memberships as we go. All right, best of luck and enjoy yourselves, and be safe over the weekend. Take care.